Thanks so much for tuning into the Trade Setup with me, Niraj Shah. It's a Friday mood on a Thursday. Tomorrow is a holiday. But I must say the markets, well, the sentiment is really sour. I think finally this is hitting everybody, that this correction is slightly different than the previous 3 years wherein all dips got bought into. This is a dip that is refusing to get bought into. If anything, it's only worsening. This is now truly a correction which veterans have experienced in their lifetimes, because the last 3 years we haven't really seen a correction. So there is a bit of a, now finally, there is an issue that people are realizing, that corrections can be deep and can last for long. It's a seminal moment for Indian markets as well. I'm saying it with a bit of a smiley really, because Avenue Supermarts is going to be in the F&O segment soon. For the longest time, this one has not been there. Everybody thought it should be there. It's not there. Finally, we are seeing this. 45 new entrants, by the way. We'll talk about that in a moment. But first, the US markets and what they did, precious little. As you say, very flat. The futures are flat too. I would reckon Asia should be marginally lower or maybe marginally higher, but no big shakes there. We might still be lower, 34 odd points, flattish in the current scheme of things, but below 23,800, and therefore now new bottoms open up, right? I mean, the market chatter is I'll brief you in with the market chatter briefly, because this is important. I think the market chatter is that the new SEBI regulations that came in last weekend are impacting the ability of the MFs to deploy in SMID stocks. Because now there are those, they have to justify below a particular price band, volumes have to be within a particular 10%. I mean, these rules are a bit complex, by the way. People are also getting adjusted to it, but because no one wants to be pulled up, I think the deployment of these funds are still not happening. The other chatter is that small redemptions are now starting in SMID funds, towards away from SMID funds into gold, debt, multi-asset funds in the month of November, and this might also be adding to the pressure. Now, we do not have confirmations of the same. We're going to be talking to Ashish Somaya of White Oak Capital at 8:25 today, so he'll give us an insight into this. But this is important because October didn't see this. If November is seeing this, then therein is a small bit of a problem as well. So what's the trade setup for the day? The sentiment is weak. Obviously, you don't need me to say this. All supports are getting tested and broken, which is actually the worrying part for our markets. Remember, it's 1% a day, but it's coming in. There's no buying that is happening, save for small dead cat bounces. 2 days ago, we bounced back to 24,150, 24,200, and look at where we've moved to. So it's not looking very good. Small stocks are now strong stocks are now starting to crack, and the weakness is now spreading to that end of the market. I mean, look at what happened yesterday. Schneider was down 5.5%. Aditya Birla Real Estate 5.6% lower. Inox Wind 6% lower. Motilal Oswal 7.8% lower. These are stocks that have withstood the correction until now. Now they are starting to crack. This is a problem. But it's not all gloom and doom, by the way. People are constructive on jewelry stocks, hotel businesses, because they believe that these stocks will benefit from the ongoing wedding season. No matter what happens, kitni bhi mandi hoye, Indians spend on weddings. Those are pre-planned, and those spends have happened, and these guys are benefiting from this. So if we look at the pocket at a lower level, maybe this. Also, the list of F&O entrants, some very exciting stocks, by the way. Look at this piece out here. Nykaa, PB Fintech, Paytm, Zomato, the big tech in India, not IT services, but the big tech actually makes its presence now into F&O. But of course, this is one which holds center stage, Avenue Supermarts, but some other large ones as well. So, by the way, does Avenue Supermarts therefore make its way into the Nifty? Key question, because now it will be in F&O. But Geo Financial, important. Kalyan Jewellers, important. Adani Green, Adani Energy, Angel One, important. So, Varun Beverages, such a large name. So, well, very interesting set of names coming into F&O as well. I actually take this as a good sign, to be very honest. Okay, stocks to watch very quickly. A lot of very good numbers, so thumbs up to a lot of names. Nalco, solid numbers. Revenues up 31%. Look at that EBITDA margin gain out there. It is cyclical. It will not last, but this is a very strong number. EBITDA margins at 38.7 versus 13%. Net profit 1,046 versus 187 crores. Strong showing, could do well. PI Industries, watch out for this one. I'm giving it a thumbs up because the margin number is better than estimated. Revenues were okay, in line. EBITDA margin 28.27, the estimate was 27.8. Net profit up 6% at 508. So, you know, better than estimated, and which is why thumbs up for a chemical agrochem company to do this. Remember what UPL did? So this one will come out smelling like roses, I reckon. AstraZeneca, no, let's leave AstraZeneca Pharma out because the numbers are a bit sketchy. I'm not quite sure of the veracity of this, but let's go on to RCF. Revenues up 3.2%. Sorry for AstraZeneca viewers, we might want to look it up yourself as well because I'm just realizing that the numbers were not correct. RCF, strong numbers, revenue up 3.2%, so ho-hum there, but margins expand 4.7 versus 2.5 as a result of which net profit up 54%, 79 versus 51. Who knows, maybe yaar. Midani, good numbers. Revenues up 15%, EBITDA margin expand 284 basis points. It's difficult in that business, by the way. Net profit up 71%. So very strong show. This one could do well. Godrej Industries, where did this come from? Look at these numbers. Revenues up 22%, 4805 crores. EBITDA margin expansion out there. Look at that, 12% versus 6.7%. Very strong showing there, and the net profit at 489 versus 165 crores. Strong show there. VRL Logistics too, good numbers. Revenues up 12.7%, EBITDA margin 16.6 versus 13. Net profit up 81% at 35 crores versus 19 crores. Not all logistic companies have done well this quarter, by the way. So good numbers here for this one. Eicher is my standout large cap stock of the day today post the con call. And what a con call they had. And look at the brokerage notes. I'm using MK as an example. They've upgraded the stock to a buy from a sell. They've raised the target price to 5,300. They say Royal Enfield connected initiatives. I have aided strong festive sales. Most importantly, post-festive momentum has largely sustained. It's better than pre-festive. Which auto company said this? Except for maybe a tractor company. So this is brilliant commentary from Eicher. They have, MK has raised the FY26 and 27 EBITDA estimates by EPS by 10% apiece. EPS estimates by 10%, led by volume upgrades. And the near-term margin pressure would be addressed when operating leverage kicks in, is what they have said. Also, like I said, watch out for jewelry companies. Look at the con call takeaways from Kalyan and PN Gadgil. Kalyan has said they've observed 20% plus same-store sales growth for a 30-day period up to Diwali. PN Gadgil said saw strong festive season demand, 7 to 8% volume growth and 35% volume growth. This effectively also leads up to about 22 odd percent. So jewelry companies doing well. City's note on Kalyan Jewellers lays it out. They maintained a buy, target price revised to 810. Expect growth to remain elevated. ROC to improve to 28%. Strong numbers there. And Apollo Tyres, lastly, 1 week number. Revenues up 2.51%, but EBITDA margin collapsed. Net profit down 37% at 297 crores versus 474 crores. So do watch out for this one as well. Thanks so much, viewers, for tuning into the trade setup. And to all of us celebrating Gurpurab tomorrow, wishing you an eternal state of Chardi Kalla.